My name is Chris Knight. I'm the business development manager here with Red Door Property Management, and everyone here should know. Go ahead and introduce
Mike
yourself.
Taylor, broker owner, Red Door Property Management. So if you guys have been following this, you know that every month we do these market reports. We break them down individually by submarket. We do Indianapolis. We always do Fishers, Westfield, Noblesville. We always throw another one in there. So we're trying something new today. We thought this might be interesting. So what happens is before Chris and I do these, we look at the numbers, we chat about the numbers, and then we record our market reports. And I don't know how it came up, but we thought, well, why don't we just record the conversation that we have about this and kind of give a market wrap up, because it's interesting to see how different the markets can be. Like Indianapolis can be vastly different than the Westfield market. So I think it's interesting to look at them all at once instead of just one little individual market at a time. So that's what we're doing here today.
Absolutely. I mean, we get calls from investors from all over the country, all over the world, really, just wondering what market they should be a part of, what market looks good. So if you're not already in tune with these market reports, you absolutely should be. And this is just going to save you a lot of time instead of having to dive into each and every one of those individual market reports. Here we are. We're going to do a quick overview of kind of the overall Indianapolis market. I know that we are all feeling this tumultuous economic feeling that we all have right now, and that's certainly real in the real estate markets. So here we are, just going to dive right in. Let's see if we can get a little bit of a grasp on what's going on and what we're seeing here in the Indianapolis.
Yeah, I think the timing is good too, because like you said, it's just kind of a weird time right now in the market, especially in the rental market, the real estate market, the economy, and it's like, what's going on? So I'll just share my screen here. Maybe we'll just dive right in. I think I started on the wrong slide though, so I'll have to fix that.
Yeah, that's okay. I think we should go back. Let's start with Indianapolis and kind of divvy up from there.
Yep. So I'll take Indianapolis, or for the most part, just kind of lead the conversation on Indianapolis, because I kind of, this is the one that I normally do in terms of the market's reports. So I always start over here with, the rental price, because that's what everybody is concerned with. So the dark line here is 2023. This is 2022. So for the most part, Indy's been relatively flat all year and consistently under 2022's numbers. And so we're just kind of seeing a little bit more of that in October. So the average rent for October was $1,400. That is down 3% from last month. That's a typo there. Down 3% from last month, and then down 6% year over year. What we are seeing though is a big increase in inventory. So we're at 2111, which is, I think we were looking at the numbers, it's like 400 or 500 more than May or something, right?
Yeah, I thought that was fascinating when we were talking about that earlier, and really the massive difference we've had from, I think you were indicating from May into June, correct me if I'm wrong, and just the massive influx we were seeing, not only in Indianapolis, but in a lot of these other submarkets that we're about ready to discuss. Just a very mass change, I guess, in the currently active homes, which in my opinion will immediately or directly affect some of these other areas that we're going to talk about. So I thought that was really interesting. A lot more inventory on the market is going to absolutely affect your average rents and your average.
Yeah, and it's interesting, kind of in a bad way, because the timing. I mean, we're recording this on early November. Inventory typically goes down because volume typically goes down. So it's kind of the worst, where volume's probably going to go down and inventory is going up. So I think we're maybe time to bust out the tissues already here, Chris, because it's a convergence of two bad things. More inventory, less activity.
So, and if you would, Mike, I think if you click, we'll be able to get rid of those little boxes down there. Okay, this is what I'm going to focus on a lot during this call, without a doubt. And if you've watched any of our previous market reports, you'll know that I really focus on the average days on market these days, because, well, in real time, that's what I am dealing with on a day-to-day basis. Is we are seeing an expansion on our average days on market, and we need to be in the forefront of that and able to give our owners the advice necessary in order to reduce the average days on market and stay below what we're really seeing in the average days on market. So The Indianapolis market report, Mike and I had a quick discussion early on, and this is a different market report, I think, than what we were seeing in some of the other ones that we're about ready to get into, right?
Yeah. In terms of days on the market, you mean?
Yeah, average days on market, and then how also the average rents reflects on the average days on market.
Yeah. So this one's interesting because in Indy, if you guys have seen the previous market reports, we've had like horrendous days on the market. I mean, I think back in it was June or July, we had over 120 days on the market. It was just unreal. I mean, that is crazy. So it's a little unusual. I mean, it's great that we are coming back down to reality, and this is what would be a normal, maybe a little bit high days on the market, but it's an improvement from last month to the 13% improvement from last month. So it's encouraging to see this number go down. But it is still 47, which is, a little bit high. That's almost 2 months, a month and a half of vacancy. That feels a little bit more normal than what we saw the past couple of months. It was, 60 days, 90 days, 100 days.
I agree.
So it's heading in the right direction, which is good.
I agree. But also, I would feel remiss if we didn't also speak to the unusualness based on just seasonality alone, right? I mean, average days on market, you expect those to expand as you get into the colder months, certainly as you get into the holidays, November, December, on just being consistent with year over year market data, you would typically expect those to expand a little bit. And here we are in the Indianapolis market, surprisingly enough, seeing this down 13% month over month. I mean, let's go. Yeah. I mean, you definitely don't need the tissues for that. Let's hope it continues. Now, my expectation, and I know this is really your market here that you're an expert on, Mike, but I wouldn't expect that to continue in the next couple of market reports.
I wouldn't think so either, just honestly based on seasonality alone, but then couple that with looking at the number of active homes that are increasing. Yeah, I anticipate, we may have bottomed out on this average days on the market for Indy. So good to see. I love it. I love less days on the market. That's great. Just I'm a little, cautious on it. That's all.
Yeah. And then before we jump over to the next report, let's also I love, and Mike, this was kind of your idea. I love the sneak peek into what we're going to see in the average rents going into next month. So if you look over at the median rental price over time graph, it's giving us a sneak peek. It looks like we're going to see an average rent continue to decrease next month, which again, seasonality, that's pretty typical. I would expect we'll see that even in a lot of these submarkets we're about ready to discuss. But let's hope that the average days on market stays consistent with what we're seeing this month. Although, again, just to reiterate, I would expect, based on what we're seeing in real time, that will probably expand.
All right, you want to jump over to maybe just take a quick footnote on average sales price. So we always, want to take a look at this from an investor's point of view and how does this play out? What do the numbers look like to purchase a home if you are still looking to purchase a home? So Indianapolis, I think for me, that's always a bright spot is the affordability, right? Is average sales price. So we cap this at $500,000 because we want to look at it from an investor's point of view. So of the homes that sold in Indianapolis in the month of October, the average sales price was $232,135 for homes under $500,000. So that's super, super affordable. I mean, there's still a lot of affordable houses in Indianapolis, and there's a lot of those that sold. Almost 900 of those sold last month alone. So there's tons of inventory out there if you are still looking to get into the market. And I would say, honestly, the affordability of Indianapolis for rent is also a bright spot. I mean, it's $1,400. When we go to the next slide, I forget what it is, Fisher or something like that. I think it's going to be over $2,000. So, that could be a driver too of demand is just affordability in the Indianapolis market.
Absolutely. I mean, if you're at all considering yourself a real estate investor, you're looking at the Indianapolis market, right? It's I would like to consider it a hidden gem, but it's not very hidden these days. I mean, investors, it's being pushed all over the place because of these numbers right here. It's an affordable market to be a part of. And now, but what I have to mention though is to see an uptick, although it's only 0.25%. Month over month, to see that tick up, number of homes sold in the Indianapolis market right now. I don't know, and I'm not an expert on other markets, right, other than the one that we're currently involved in, but I would be surprised if we're seeing any bit of an uptick in number of homes sold in many other markets right now. So to me, that says something about the Indianapolis market, especially in this investor point of view.
Totally agree. All right, you want to move on to the next one?
Let's do it.
Okay. Next up is I'll let you take this one, Chris. This is normally yours.
Yeah, here we go. All right, Fishers. I love this market. Everyone knows I love this market. The ability to find good quality applicants, the least amount of turnover, and without a doubt, the least turnover costs in this area. It directly reflecting your quality of tenants. Active homes in the market, 108 active homes, which is pretty consistent with what we've been seeing. Somewhere hovering around 100 homes active at one time is pretty consistent. And then the average rents. Now, this speaks to exactly what I feel in real time. We are expecting average rents to decrease. Down 2% probably speaks more to seasonality than it does to the overall market changes that I'm feeling. If you've watched any of the previous market reports, you'll hear me talk a lot about what I feel is a correction coming to the overall real estate market, and specifically our rental market that we're currently a part of. But and then the average days on rent. Go ahead.
Look at the preview of November. I mean,
there you go.
It's gonna go down next month for sure.
There you go. I'm glad you pointed that out. Yeah, down 3% month over month speaks more to seasonality, but look at that curve as it continues to decrease in our sneak peek into November. Now that speaks to in my opinion, to a little bit more of a correction in the market when you're seeing that steep of a decline in the average rents. And then the average days on market, without a doubt, and let me say, if you're not paying attention to our previous market reports, you've got to get in tune with these. You've got to you've got to subscribe. This market you have to be in tune with, certainly if you already have an investment property in any of these markets. Average days on market up 20%. That's absolutely what we're seeing. In a lot of these markets, certainly even in the Indianapolis market, although we did see a little bit of a downtick, a little confused by that, but 20% increase is absolutely what we're seeing, and I would absolutely expect that to increase on the market reports coming over the next couple months, let alone the seasonality, right? I don't want to lose track that this is pretty much the norm just based on seasonality alone. So
yeah, I think just to echo that, Chris, it's so important to stay on top of this, especially now. I mean, real estate's always fluctuating, it's always changing, but I feel like right now we're even in more of a tumultuous environment where we don't know what's going on. It's changing day by day. And so just to stay on top of this, to try to get ahead of this, if you have a vacant home right now, I mean, it's looking like market rents are going to go down. So if I had a vacant home, I would be trying to secure a renter as quickly as possible, maybe taking some price reductions, making some concessions that I maybe wouldn't normally make, because I feel like if you can secure somebody at that $2,000 range right now, if you were talking about in February, that might be $1,900 or something like that. So I would say do what you need to do to get it done now, especially while it's still relatively warm out. We're not into the thick of winter.
Exactly. Yes. There's no better Christmas present rather than placing a tenant ahead of Christmas. So you've got to be in tune with that. If you're with another property management company, you've got to make sure they are in tune with the day-to-day traffic that you're seeing on your property that's on the market. You need to know how many clicks you're getting, how many showings certainly that you're getting on the property. And if that number is 0, you should not be looking at a $50 price. You need to be looking at $100, $150 minimum price reduction, make an impact. Place a tenant. That's the best advice I think that we can give you right now. And it's not all doom and gloom. I mean, there's going to be a lot of uptick we're going to see, I think, in the latter part of maybe the third, fourth quarter of 2024. But right now, we're looking in real time. It's important to place a tenant. And it's holiday season.
100%. Well, and we've had a huge run up in prices over the last year or two, right? So if you got in before that, you got in for the wild ride. You were able to take advantage of those, but we just want to report what's happening right now, and there is a correction happening. And so, we are hounding our owners of vacant properties to take price reductions, do what we can to get these listed, because we are on top of the market. We know what's happening, and we can kind of see into the future a little bit. You know what I mean? To a certain extent. So that's why we try to stay educated like this, so we can educate our owners to get their places or get their homes leased up.
Exactly. Yeah. Well, let's take a quick look over at the sales price here before we jump over to the next slides. So average home sales. So hopefully we don't have to repeat this on everyone, but this is what we consider the investor point of view. Homes that are going to sell under the $500,000 price point. So those are averaging out about 361. Near the 362. Now, what is also really awesome about this market, it doesn't surprise me, there's a lot of new construction going on in all of these submarkets, right? So Number of homes sold, 74, and that's up almost 4% month over month. So that's awesome. That's great. The sales market's still holding strong in this market, but that's probably going to result in a higher inventory, which is also going to kind of reflect in some of those other numbers we were talking about earlier. But that's great for this current market, still continuing to hold on even as we feel the effects of seasonality.
Absolutely. And I mean, I think, this is more than Indy, but I mean, if you take a look at this from a nationwide point of view, I mean, 360 is still super, super affordable. Compare that to California or Arizona or something like that. And Fishers is like a top tier market. It is an amazing market. It's got great schools. It's going to have great resale value. You're going to attract really high quality tenants. So to get that for 360, well, that seems like a lot compared to Indy,
Absolutely, yes. And you got to keep in mind your turnover costs. And you're going to hear me say this a lot as we continue on with these market reports. Your turnover costs are going to be much, much lower in these areas due to your quality of tenants, primarily driven by the school systems in this area. So that's important to keep in mind.
Cool. Let's look at the next one.
All right.
Noblesville. This is you too.
I love Noblesville. I love it, love it, love it. Now is where I'm going to bust out my tissues though, because I'm jumping right into it. I'm not going to hide it. It's the average days on market up 66%. Look at last month's market report. That is not what we were seeing. We were much lower than that. It was awesome. I was touting this market, buy. But we're up 66% here on our average days on market. 50. Man, it hurts. It hurts to see that, but that is what it is. Now, what I'm immediately going to talk about next, average rents. Well, we're seeing average rents tick up by almost 2%. Well, that's weird. How are average rents going up if my average days on market are expanding by 67%? Well, what I believe that is, and not only that, let me also, before I jump into why I think that is, the median rental price or sneak peek into November. If you watched any of our previous market reports, I love this very consistent line right down the middle. It screams healthy market. And here we're about to see a big uptick going into November. So why are average rents going up when our average days on market are going up right along with it? Well, I believe that that's a lot of new investors to the markets wanting to, the information that they're receiving is behind of real-time data that we're experiencing here on the ground. I believe that they are hoping to achieve higher market rents that they were seeing, back in April, massive rents. And then what they are ultimately going to have to do is reduce. Well, when they start at 1850, you're going to see an uptick on the average days on the market when the actual average rent should be closer to maybe 1650 in this area, maybe 1695. That's when you're going to see those average days on market kind of level out. Mike, what do you think?
Well, so are you officially calling it? Is this you're calling the ball that this is the top here, and we're going to see only reductions from here?
I'm not ready to die on that hill just yet, but man, I certainly hope so. I mean, gosh, I don't even want to look at it anymore. Next slide.
No, I think you're right. It's kind of a similar story with inventory as well. I mean, that 121 is up a lot from June or May to June. And so I think you're right. I think it may be a little, obviously in November, we're going to see a little bit of an increase, but I think you're right. I think ultimately we're probably going to see some decreases come December, January, February.
Yeah, getting our sneak peek here in November, I am super confident we are unfortunately going to see an average days on market tick up next month. I mean, if those average rents are going up and they're higher than what I believe that market currently should be achieving, I have to believe that the average days on market expand. And that kills me. Love Noblesville. I mean, it's a great area to be a part of. It's expanding, great school systems, very similar to the Fishers market, very, very near to the Fishers market. Gets a lot of that runoff. Great quality applicants, low turnover costs. If you're an investor looking in the Indianapolis area, I would keep my eye on Noblesville without a doubt.
For sure. Want to talk about sales real quick and we'll go to the next one?
Okay, average sales price, $334. That's investor point of view. Anything selling under the $500,000 price point, averaging out at $334, $459. Now, this is what I would be expecting right now, just given the overall view of the sales market from all my real estate buddies on the sales side. They are definitely seeing a decrease in the number of homes sold. And here we see it in the Noblesville market, down 4% month over month. That's absolutely consistent with what I'm seeing in the market. And I would expect that to absolutely, and 4% in my opinion is more than just seasonality. Seasonality, I would personally expect maybe closer to a 2%. That would speak to that. But 4% month over month, to me, tells me there's a little bit of an economic factor to the homes being sold.
Yeah, I mean, we all know rates obviously are having a huge impact on sales. Grind us up to a halt. It makes life difficult. Makes life difficult for investors to make those numbers work. So, although I did just read the past couple of days, mortgage rates have gone down pretty significantly just in the past couple of days. So that's a good thing.
I did catch that headline. Yeah.
All right, cool. Let's jump to the next one. This is Westfield. This is my favorite market. I usually do this one. I own several homes in the Westfield market. I love it, love it, love it. And the numbers prove it. It's just like been on a tear all year, and it kind of continues. So the year over year graph, I think this is the only one that's consistently over 2022 for the entire year. And if you've been up in Westfield, if you've driven in Westfield, oh my God, there's so much construction going on. There's so many things going on. I just read something about some huge STEM building that they're building there. They're building some giant indoor pickleball facility. It's going to be like 40 indoor courts. I mean, just massive construction and activity up there. So I think kind of the sky's the limit, to be honest with you, in terms of Westfield. It's is so much going on up there. So
I have to ask.
Average, what's that?
Sorry about that. I have to ask. You brought up pickleball. Do you play? Do you play pickleball?
Oh yeah, I love pickleball. I love
Absolutely, yes. By the way, if you're not already out on those courts playing pickleball, you better get out there. All right, keep you young.
Absolutely. I'm trying to get. Actually, I got Jack, our oldest son, into it too. So I
Nice.
love it. I absolutely love it.
Yeah, Colvin and I we'll meet out at his courts shortly after school. We absolutely can't get enough of him. Sorry. Please.
No worries. Okay, so average rent for October, $23.95. Look at that. That's up 23% from last year and up 2.5% from last month. So it just continues to be on a tear. Active homes on the market, 85. That is a bit of a similar trend where we're seeing that creep up. But taking a sneak peek here, it does look like we're going to have a little bit of a price correction in November. Now, it doesn't look drastic, probably 25 or 50 bucks, something like that, but it does look like it's coming. And that's, something like that, I would probably attribute that to seasonality. I mean, we'll see what happens at the end of next month, but typically you see price decreases in November and December as we go through the year. And then January, we start to see activity pick back up. So not too concerned about it with all the activity and all the positivity that's happening in Westfield. Not super concerned about that. What I am concerned about is, and this is the trend that we're seeing, right, is days on the market. Look at that, 60 days on the market. That is crazy. And that is up 7% from last year and 58% from last month. So that is wild. I don't have a great explanation for that other than more inventory. People trying to push their prices.
A little bit of both, right? I think that we're going to see more inventory on the market as our average days on market. Those probably correlates. I'm not positive, but I'm pretty sure that they probably would. Active homes on the market, I think, are going to expand. Certainly, when your average rent is up almost 3%, right? This is just like the previous report we just had. I believe that these are owners still trying to achieve the higher rents that were advertised to them when they decided to purchase in this market, and they're trying to achieve that. Well, I'm sorry, you're not going to be able to do that. And what's happening while they're trying to achieve that is you're seeing an uptick on the average days on the market, nearly 60% month over month. I think that's absolutely going to, our active homes on the market, that's going to tick up. Our average days on market is going to tick up. And at some point, those average rents, I think, are going to tumble in this market because they're still on the up.
Yeah, and I think it's, we try to send this message to our owners, but you got to have, if you're investing in real estate, you got to have a long-term mentality, right? So it's not about this month or this year. It's about the 3, 5, 10-year cycle. And so, if you have to make a price correction now, that's okay. Take a $50 haircut, $100 haircut, whatever you need to do to get it leased up before these prices go down, get it leased up, and then we'll have a new cycle. Potentially next year we can raise rents. And if you're in a market like Westfield, I mean, not only are you getting rent for cash flow, you're going to see significant price appreciation in a market like this. I mean, that's a huge part of the equation, and a big part of why you would invest in Westfield is the appreciation that you're going to see.
Absolutely. And we probably don't speak enough to that. These market reports are really designed to give you real-time data so that you can make real-time decisions in order to place a tenant as quick as possible, reduce your vacancy. And we should really also include, although a lot of this may seem doom and gloom, look, there's ornaments in the top right-hand corner, all right? So if you're feeling too sad, look up there, get a little holiday cheer, because yes, this is absolutely a market that you want to be a part of. Now, Mike didn't mention it, probably because it gets mentioned all the time when you're talking about the Westfield market, and that is Grand Park, which is continuing to kill it. I mean, it's killing it in the youth sports program. This place stays really, really busy. It's expanding really, really fast. It's definitely not all sad news. This is a market you should absolutely be looking to invest in. Now, the short-term
100%.
rental game, I know, is kind of dried up a little bit. They're trying to get ahead of it because it's becoming a little bit of a saturated market, because everybody who considers himself a real estate investor is looking at short-term rentals right now. Well, this is a beautiful area if you can sneak into this market and start up your short-term rental, I think. But yeah, I mean, just to close out, this is just a good market that you should absolutely be looking at, no matter your average days on the market looking.
Yeah, totally agree. Two things. One, did you see that they're doing an NCAA pickleball tournament at Grand Park? Did you see that?
No.
Yeah.
All right, just where do I sign up?
Exactly. Well, they just like the events just keep coming there. And
Absolutely.
then the short-term rental thing, I was just looking at this today. So we started looking at short-term rentals up there 2 or 3 years ago. I think there was 52 on the market, and as of today, there's 120. So I mean, it's more than doubled in 2 years. So it's pretty saturated up there for short-term rentals, I will say.
Well, there you go. Yeah, that's exactly what I suspected.
All right, real quickly, we'll touch on average sales price. So again, homes under 500,000, average sales price 387, 033, 96 of those sold last month. So still lots of homes available up there. And they're building a nonstop up there. I mean, there's every builder is everywhere. But that does represent a little bit of a decrease from last month and last year. I'm just attributing that to rates, cycle, seasonality, all of the above. So
Yeah, absolutely.
let's take the last one. Chris, you got Greenwood.
Okay, Greenwood. Now, this is kind of a little bit more of a hidden market, but I do kind of relate it a lot to the Noblesville market. It's on, although you're going to look at these squiggly lines here on the median rental price and be like, what? That is not near as stable as the Noblesville market. Well, Greenwood is, well, like I said, a little bit of a hidden market. It's just beginning to find itself, but still they have a great start to their school system. So this is a great area to invest in. And if you'll look at a lot of these submarkets, and I'm going to jump immediately over to the average sales price at 298, these submarkets, you're not seeing 298, you're seeing in the 300s. So this is still a great price point to get into. And your average rents, even though they've ticked down a 0.25%, you're still seeing an average rent rate of $1,600 a month. So this also seems to be, well, let me jump down to average days on market. Average days on market, even though they've ticked up almost 13%, we're still seeing an average days on market at 35. I mean, to me, this looks like, even in a rough market, this looks like a pretty strong market, pretty stable market. And that's even with active homes currently on the market at 140, which is, I think, if I'm not mistaken, one of the highest numbers we've seen in these submarkets. So
Yeah.
I know I kind of jumped around through a lot of those, but I'm going to jump right back over to the median rental price over time, because I really want to get a sneak peek into what we're going to be seeing in November. And what do we notice here? We're going to notice an uptick on rents. I'll be very interested to see what that's going to do to our average days on market during our next Greenwood market report. So you've got to tune into this market. Out of all of these markets that we've currently been keeping an eye on, I would, if I'm an active investor in this market, I'm probably looking at Greenwood right now, Noblesville maybe as a secondary, but Greenwood I am definitely keeping my eyes on, because I can get in there for a relatively affordable investment price point and still place a tenant in a reasonable amount of time, and then still reap the rewards, because there's still a lot of good construction going on in Greenwood, a lot of new home builds going on in Greenwood. So you're still going to reap the benefits of the appreciation over the next couple of years, which is exactly what you should be looking at right now. So Greenwood all the way. It has earned its holiday spirit. This is a market I want to be a part of.
I agree. I mean, the schools are good. It's got good fundamentals. I would say that price graph is weird. That's a weird one, right? I mean, it just peaked in May for some reason, and it kind of has taken a dive. But that's just a little bit of an oddball in terms of the trend over time for that. So I'm optimistic on this one. I think there's upside for to push the rents on this one for sure.
I definitely feel some upside. Yeah, I'm trying to block out the graph over there because it's giving me a little bit of anxiety the way it wobbles all over. But this market's alive. It's growing. Again, I want to reiterate. I think a lot of that squiggly line, it's a little bit of a hidden market, and I think it's just beginning to find itself. I'm talking to a lot of new investors. They are starting to mention the Greenwood name more than ever before, and so it all makes sense. These numbers to me make sense. Average days on market up nearly 13%. We all know why. We've talked about it already in these previous market reports. A lot of seasonality, without a doubt, but without a doubt, it's also reflective of the current economic. You want to stay ahead of it, and it looks like maybe they're trying to stay ahead of it here in Greenwood with your average rents already ticking down. Although it's only 0.25%. We'll see what happens in the next market report for Greenwood.
Awesome. Well, that's it. That's all we have for today.
That's a wrap. Yeah. We'll have to develop a name for this kind of packed market report. So any ideas, let us know. But I thought this would be super, super helpful to certainly new investors, right? Looking into the area, where should I invest? Well, here's the real-time data to help guide your decision. Of course, you can always reach us on the phone. Don't hesitate. Give us a call. Happy to help in any way that we can. Run a rental analysis on a new prospective property. Let us know. We're here to help. And of course, if I haven't mentioned it before, like and subscribe. You've got to be tuned into these market reports. If now more than ever, right?
Yep,
during
absolutely.
a healthy economic time, you got to be in tune, right? You got to be in tune with where your dollars are going. But right now, it is essential.
Yep, I totally agree. Could not agree more. Especially right now, if you can educate yourself, get ahead of it, get your thing leased up. It's going to save you money in the long run. So stay tuned. We're going to do these every month. I don't know. This felt pretty good to me, Chris. This is our first round, but it felt pretty good.
I loved it. This is great. I felt like it was a lot of good information. I even got a lot of good information from just going back and forth. Yeah, this is good. I like it.
Awesome. Okay. Well, I guess that's a wrap, guys.
That's a wrap. Let's close it out. We'll see you guys next month.
See ya. Okay. That's pretty good.
Boom, baby.
That felt good.
Mike, I loved it. I think it was good.
Dude, I think it was really good. And Chris can get some really good stuff out of that.
If he can't, we need to find somebody.